Bill Baruch joins us, president at Blue Line Futures. What's up, Bill? How about this crude oil trade? Is it going to keep going?
You know, I think the market is remaining bullish. And I think the interesting thing here today is you had this whipsaw down, and it came back really strong. I mean, we're actually making higher highs in the session since before that happened. And OPEC Plus said they would add more production than they had been adding back from month to month. So July and August, they're going to add nearly 700,000 barrels in production back. Now, they were doing 400 before. And yeah, that seems bearish, but I think what really is happening is it's a bullish move because they're worried about the demand landscape. They're not worried about the demand landscape. I mean, they're worried that the demand's gonna be too strong. They're bringing back this supply, to meet the demand. So I think it's bullish in and of itself what they did here, and the trend has been higher too. So that typically helps how markets digest things too.
I remember last time we spoke, correct me if I'm wrong, or take the freebie, I guess, but I'm pretty sure I recall you telling us to stick with crude and ride out the strength in WTI, that you weren't ready to fade the commodity rally yet. So it sounds like you're still in that camp.
Oh yeah, we've been bullish crude for a very long time. So
okay.
it's been the gift that keeps on giving over here, whether it's the future side or in our stock portfolios. It's been a good one.
What do you think are the odds we can make a new high? Is it possible to get above that Russia initial invasion of Ukraine? What's got to happen there? Do the stars have to align?
Well, there's two ways to look at it. You got the July contract, which right around 116, 116 and a half is the July contract high. So we started making new July contract highs this week, and the 116 and a half is also like a retracement in the continuous contract, which set that March, whether it was the March contract or it happened in March, maybe April contract in March, that went all the way up there. That was that 130 move. So there's a good resistance level, 116.40 to 117.07. I think that's how we defined it on our morning research. We need to get that close above there. This late move in the session, where I think we're above 117 now as we're talking, but I think that happened after settlement. So we're not really decisively breaking out above there. Tomorrow, where do we close? I think that really matters, and that's going to continue to feed it. Now, today's whipsaw early was very similar to what I think it was 2 weeks ago. We had a whipsaw, that came down pretty sharply, and the market came back up, and that sort of led it higher. So I think it's sort of a rejection of lower prices. Momentum's remaining bullish. EIA report today, too, a headline draw of 5 million barrels of crude. They had 5 million released from the SPR. Net imports, were down. But overall, which helps aid that. But overall, we also saw refinery utilization down week over week. So they're drawing less crude for those products. I think it was a fairly bullish report, and the market's also responding from that, too.
For the most part, crude going up has happened alongside stocks under pressure. Just kind of thinking about the last 7 months, a broad brush description here, but its connection to inflation and the implication there. So how does the stock side of your analysis fit into this? Walk me through what you're thinking here, because today is a pretty powerful day here. You got companies like Microsoft doing a total U-turn after cutting guidance. If they did that a month and a half ago, stock would have been down 10%.
Yeah, again, I'll start off with that. That's a good point. Bad news, we couldn't go lower. I think it's a continued sign of sellers' exhaustion. And that was our theme last week, middle half, late part of last week was sellers' exhaustion. So this, we had a number of things here. You got through the heart of earnings season, and I think a lot of the stocks got beaten down, so the sellers became exhausted. And as well, you have Shanghai opening up, China kind of moving forward, some stimulus there. All starts to help form a bottom. Negativity was extreme, and when you get this extreme negativity, from a supply demand fundamental point, or supply demand technical point, if everybody's already sold, who's left to sell? Now, when all this sort of played out, you have an inverse head and shoulders in the S&P as well as the NASDAQ that sort of started playing out through the middle of last week, I think it was, and then we ripped higher from that level, and we rallied pretty good. A lot of this all played out really nicely, and then you had a trend line breakout as well in the S&P. So this was a big, powerful move. We were very bullish down there. I started the week off in my morning note saying, listen, if the market was 4,200, it's a pretty big move. You got to start trimming some longs. We actually just said, hey, watch a couple rounds here, watch it consolidate this week because we are still bullish, but it's important to monetize. And that's one of the things I talked about with Ben. I think I spoke with him yesterday in the early show, is monetizing a move and making, watching a few rounds, reassess the situation, because the market can't rally 100 points every single day, or that's really going to be, every day is great, but if you see 2 or 3 days like that in a row, we could have a limit down. We have something that's a bear market. This consolidation, this digestion of gains is extremely important, but it's important also that we held good technical levels. 40.55 was the level we were watching. It didn't quite get down there. The 21-day moving average, which we broke out above last week, 40.38, I think it's 40.40 now, that didn't even get near there. So very constructive holding out above there, I think, as the week is unfolded. And then you have this sort of bull flag-like pattern developing with slight lower lows and slight lower highs. Today, the NASDAQ took out the low by just a little bit. And it's less about a nice, beautiful bull flag. It's more about the market profile that's created from it, trapping, shorts that didn't have to short cover. And now we're leading into non-farm payroll, and things look really good. So I'm excited to see it. I'm excited. I think we can get up the 50-day moving average. But again, it's going to rely on the data.
You don't want to get overcommitted.
Yeah, we have a window right now. This window is what I'm calling, leading into the inflation showdown at Jackson Hole. April and May were never supposed to be, inflection points for inflation. It's the data, the CPI, core CPI data for June and July and August that are start being released in July.
All right, there it is. Jackson Hole, the symposium, a little mini preview. Tomorrow showdown. So you like the consolidation, but also need to take the wins as they come and not get overcommitted ahead of big events like tomorrow. I like that message. All right. Thanks, Bill. Good stuff. Like the technical levels to watch. Mr. Baruch, the president of Blue Line Futures.